Hello guys, welcome to the Trading Parrot. We got almost 80% chances according to Polymarket of a US government shutdown. In today's video, we're gonna not just focus on what could be the implications if that happens, but also depending on how long is that shutdown, possible effects for equities, general markets, and Bitcoin with crypto. Of course, we need to cover our swing trade. We are currently in a long, still in profit. That position is already risk-free. We'll go into detail on that as well. In just a couple of hours, I'm gonna go live and do some Altcoin TA, so make sure that you click notify me in the section live of my channel so you get poke in the shoulder as soon as we go live and you don't miss the chance. Remember that you can request any equity, any symbol, any altcoin that you want me to do TA, and that's in less than 2 hours going live. All you have to do is leave a comment in the live chat requesting what you want me to do TA. I'm gonna do by order from top to bottom, so the first one that puts a comment got their TA secure. I'll see you there. Interesting to see that every Solana video I put out, it gets more views, more than twice any other altcoin, and that XRP is getting very little attention. Go and check those videos from yesterday. It's just a 10-minute video going in depth with the coins. If you want to trade altcoins or Bitcoin, what better option than opening an account on the exchange 2bit? This exchange has been built by Bybit people, so it's gonna feel very familiar, very easy to use, and it takes just 2 minutes to sign up because KYC is optional everywhere in the world on 2bit. Deposit your crypto, withdraw your crypto, start trading immediately with leverage, any altcoin, and they give you $50 for free as soon as you sign up. Now, if you deposit your own cash, 30,000 are the rewards. CryptoQuant, specifically Martin, is saying that Bitcoin altcoin volume share just hit an all-time high of 82.3%. Even during the 2021 bull run, the altcoin share didn't reach this level, guys. In May 2021, altcoin trading volume percentage spiked to 76%, and that was the highest level ever. This was during the altcoin season. So we are kind of getting an altcoin season. It's just that the nature of this altcoin season is very different. You can see that we are up and down, 76, 67, putting higher highs and higher lows, with the exception of 27th of September with this lower high, but we can still put a higher high in here if we want to. And something to be aware of, this is not necessarily the most bullish signal for today, which is Jim Cramer saying buy crypto. You know what it means. This, you can check the comments in here. People are already getting worried, and we got Martin again bringing some new data from CryptoQuant, and this one is showing how futures are taking advantage of this pump. This is a leverage driven pump which can many times be very short-lived, and that's why we are taking measures on our long. We are not riding that long fully naked. We are protecting our parts in a way in case we go back below my entry, which is 111. It seems like a massive long position has likely been opened, and this is on the retracement after hitting around 114k. And by the way, guys, do you remember my video about the scene of the crime? That was 6 days ago. After that, we identify a scene of the crime number 2, and I can fairly say now that both scene of the crimes have been visited by the murderer. So job done, guys, job done. Well done for you guys if you are consistently watching the videos and understanding not just the targets that are high likely, but also what's the rationale behind it, because that is the best takeaway that you can get from this channel. US ETFs bought 518 million on BTC and 547 on Ethereum. Look at the ratio on that. Bringing back risk on Ethereum particularly is some supporting evidence that maybe, just maybe, altcoin season is not fully done. Let's remember that altcoin season this cycle has been really crap. 10 days, 1 week, and in here so far from 12th of September, we could say up until 26th of September, so more than 2 weeks so far. So this still is the best altcoin season that we have had. And if we could sustain it a little bit longer, like 1 month, 2 months, that is where we can see the best results. Remember, for holding the positions that you already built during Bitcoin season, unless you want to just swing trade your alts, not to start buying and investing during an altcoin season, unless you really want to get wrecked when the bear market hits. You may notice that I'm telling you the opposite to the other channels, and that's because the other channels have shady intentions, many of them. So if you still want to watch them and you don't want to unsubscribe them, which is what I will encourage you to do, then watch every content just as entertainment, put a pinch of salt, and then get rid of the message. FTX, the next pump is sponsored by FTX. Over 5 billion will be repaid to creditors in stable coins tomorrow. This was posted yesterday, so this means today. I don't know if this is real, guys. Let me know if you're being paid today. I don't know anybody that is being paid on FTX today. I got paid a long time ago, so I got no idea really. I cannot confirm if this is a real thing. Let me know in the comments. And yes, guys, we got just 24 hours until the Democrat shutdown. That's what the White House is saying on Twitter. And Polymarkets has flagged this as 79% chances of a shutdown in 2025 and 80% chances of a shutdown on Wednesday. Here we got from Candidly Tiff. The last 2 government shutdowns happened under Trump, with Republicans holding a majority in the House and Senate. In January 2018, 3 days. Then in December 2018 to January 2019, 35 days. Republicans do not know how to govern, blah, 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 blah. That is just politics, but I'm gonna skip into the detail of the length. You got 35 days in 2018, 9 hours, 3 days, 16 days, 21 days. That's 3 weeks. That's more than a month. The most recent one, we got plenty of 1 to 3 days. So keeping this data on the table, we're gonna do an analysis on what it could imply for equities, for general markets, for crypto, and Bitcoin, of course. Remember, these videos tend to be longer because there is substance, there is quantity and quality of alpha in this channel. If you do not have time to watch the video, put it in 2x, put it in 3x. Let's get some Alvin the chipmunk in here in the house, or simply check the timestamps. Yeah, of course, on the description, my team puts always timestamps so you can skip straight into what matters to you. Let's see what ChatGPT thinks is the most relevant news today. Leverage BTC longs are back. Yeah, I'm agreeing with that. Rising perpetual open interest. Funding show traders re-risking into Q4. Cleaner position after last week's flash can accelerate upside on good news. Let's remember that we are on the last day of September and we might get away with getting a green September. Let's refresh this to see so far the returns. We got a decent almost 5% if we close like this. The past performance states that a green September is usually followed by a green October and November. That's why the people repeating over and over the October is about. And I think if I remember right, in the previous October, we closed September at 66K in 2024, and then we came back down to 58K on the 12th of October. That was thanks to a green September. So getting that green October and November in the past year didn't necessarily mean just a straight line from the greens of September into October. It actually meant coming back down 11 to 12% from the highs of the 30th of September. Just to keep in mind, and this is still a breakout, right? We are looking for a range to the upside, but those people that are very reactive to price action need to understand the context of how it could play out. Noticing here that we closed September at RSIs of 67, and then going 12% down meant that the RSI visit 39. That was right before hitting the highs of 86, which is our 4th hit of the top of the channel on the daily RSI in this whole cycle. So how are we approaching the 30th of September? At the moment, we are at 56, a bit lower than the 67 of the 30th of September or end of September last year. And we are in the context in here of a squeeze that just got reclaimed from 35 in the green line in there, which is bullish. But now we are approaching the resistance on the daily. Slow down, slow down. Let's go back into the news. We're gonna cover the daily. Don't worry. Swing traders, I got you covered. We had crypto funds saw 800 million outflows last week, 700 500 million on Bitcoin. So definitely those 500 million are helping to balance things out, hopefully in a bullish way. Sailor Strategy buys 196 Bitcoin. That's 22 million. It's a buy the dip, but it's a slowdown relative to the previous buys. This is way smaller in my opinion. And of course, today I ask everybody what do they want to ask. If you wonder why I didn't do this yesterday, and this is, I'm gonna call you off guys, in my channel, in my community, in Patreon. Yesterday we were coming down and the price was finding a bottom and no one had any question. We need to be the opposite to the market. We need to be looking for longs in that situation, and no one asked any question. The questions came after the video went already live, and that shows that people have very little interest when there is actual alpha to the upside. Remember that yesterday I was calling for a breakout to the upside. Now everybody has interest when we got a lot of futures and we are risking that we get a pullback. So careful with your approach to crypto. It should be the opposite. MJ says, your thoughts on what seems to be people front running rate cuts. Every move to the upside now is coupled with a significant increase on open interest. So now we need to put not just the rate cuts on the table, but we also need to look at the effect of the shutdown and how long it could be. The equation on general markets macroeconomy is becoming more and more complex by the day, with trade wars, geopolitical tensions, shutdown, and the list goes on and on. So of course you should be expecting speculators to take quick bites here and there before we do the actual move out of the squeeze. What squeeze am I talking about? I'm talking about the weekly time frame. Guys, we are definitely, just do the homework, go to your chart, put the weekly time frame, put a Bollinger band or a Bollinger band width underneath and see where we are. It is very low volatility at this point in time, so we are overdue for a breakout in any direction. So what's going on at the moment is that every trader is just trading the range, taking the profits very quickly, but in reality we should be focusing on what's going to be the final exit from the squeeze, because that could be a sustained move and we could really profit from that. Hi, I think you're from UK as well. Any chance that you could cover thoughts on the proposed regulation of 20 cap of stablecoin in the UK? I think this number applies to just people, not businesses. I think businesses, corporate accounts have a larger cap. But if they cap to 20k, I see two things happening. Some proportion of people are gonna sell off and liquidate into fiat according to their regulations and their actual rules, and a big proportion are gonna keep just that in DeFi and they are not gonna declare it, which is definitely not what the government wants, but I see how that could happen. And I'm not encouraging, it's just my finger in the air expectation of what could happen. What is the S&P 500 bull support market band now? What is the likelihood of the S&P 500 pulling back within next 2 weeks or so? Remember that the bull market support band is very close to the 21 weekly, which we always track when we do analysis on indices. But still, when we get into general markets later in the video, or if you want to go to the timestamp and skip to that, I will cover that as well. Today I also want to go cover gold. Someone asked me to review potential targets to the upside if we continue with the rally. Are you looking for a short in the close future? Absolutely, but that is all subject from where? From 111 entering on a short, from 114 entering on a short, yes, but it's a little bit high risk because I think we got on the table 125 and 130 doable. So if I enter, I really need to make sure that my risk management is in place. Hi TTP, what are the probabilities of BTC going back into 107 or even below now that we are entering Q4? Well, absolutely possible, guys, because look at what happened in 2024. We crashed 12%, and I think a 12% pretty much puts the price at 102 from that swing that you can see in there. If we calculate it from this swing, 12% still gets more or less into 103. So if we mimic the previous October based on closing in the green September, then we can get 2 weeks of downside in the beginning of October and still close in the green, which is what we did in 2024. I'm not calling for that. I'm just saying that it's possible. So whatever is your risk management should ideally include that possibility. No one wants a cold shower. How serious will the US government shutdown will be to market in the short term? We are gonna cover that in depth right after I cover everything that's going on in the past 24 hours, general markets, macroeconomy. Remember, 1 is bearish, 10 is very bullish. We still got the trade war. There's an escalation. New US tariffs, 10% on lumber, 25% on cabinets, furniture, effective on the 14th of October. We already have some new tariffs coming in on the 1st of October. I ignore if they got cancelled, but I remember reading that some of them are incoming, and that is tomorrow. China PMI, ongoing contraction, official manufacturing PMI 49.8. That's the 6th month below 50. Signals weak demand, stimulus hopes linger. That is today. Oil supply eases inflation pressure. Kurdistan exports resuming. That's a 6 out of 10, so it's mildly bullish. The previous one was bearish, and the trade war definitely is risk off, inflationary tilt. Remember that anything that pushes inflation up makes this trade-off between cuts and no cuts. On one end you have tariffs, on the other end employment. Things breaking this week. We should be getting employment new readings, but if there is a shutdown, there is that potential that they're gonna skip the reading. Very convenient. Imagine the situation that employment is really broken and you get a shutdown conveniently happening a few days before, and you keep this shutdown in such a way that you skip every metrics on employment. What happens after that? Well, then you end up not knowing that something broke or that something is really good. I don't know, guys, but it feels really odd to shut down the government on the same week that we are supposed to get unemployment rate. We still have job openings today. Well, I don't know. Let me know what you think in the comments. It's just a thought. Fed on dovish follow through. New York Fed's Williams recent rate cut aimed at bolstering the job market. More data dependence. This is bullish 7 out of 10. Yeah, we're never gonna get everything bearish or everything bullish. It's always gonna be a little bit of a balance. US-China tech frictions, that continues. That's a 4 out of 10. And the rate cuts are sitting at around 89% at the moment. So apparently the shutdown is not really affecting the odds, the expectations. So let's have a look a little bit deeper on the shutdown. What does it mean? What scenarios do we have? The deadline risk is real. There is higher near-term uncertainty. Historically, shutdowns don't derail equities beyond the very short term. 6 to 12 months forward returns skew positive once funding resumes. So here we have a table. Of course, this is just speculative. ChatGPT is just gathering things from the opinions of many blogs, many different sources. We got Yahoo Finance, AP News, and this that I never heard, Kiplinger, whatever that is. So we got 3 horizons, 0 to 2 weeks, 1 to 3 months, 6 to 12 months. And for Bitcoin, in the short term, that's a 5, is neutral, medium is positive, and long term is positive. For US equities, potentially risk off into uncertainty, and for altcoins is not necessarily good in the short term. The most affected ones are probably altcoins. 1 to 3 months, it could be a bit better. So we got 3 scenarios, A, B, and C. No shutdown, short-term shutdown, or prolonged shutdown. What do we mean by that? Well, short shutdown is less than 2 weeks. We already saw before that we can have anywhere from 35 days into just a single day or hours. If there is no shutdown, of course, that is a relief apparently for markets according to ChatGPT. Then we should be expecting a gap up. Contractors and airlines should expect a bounce. Crypto quick risk on pop. Alts outperform for a day or two. If we get a short shutdown below 2 weeks, that's the base case, by the way. Equities get choppy, headline driven, defensives holds up. That's a climate for just swing trading, taking short quick moves, and that's it. Crypto majors resilient versus stocks. Alts underperform on liquidity. And we get a, let's say we get a prolonged shutdown, more than 3-6 weeks. Equities definitely not doing great, and the risk of kind of spread across the market. Higher realized volume, regulatory SEC slows down, hit new product, listening timelines, major still outperforms alts. What actually changes in the economy? Well, near-term service disruptions. If prolonged, the multiplier effect grows, of course. We need to be tracking the funding headlines. So far, the ETFs are getting lots of inflows, so it seems to be that the shutdown news increasing have somehow benefit Bitcoin, at least so far. The aggregated open interest on all exchanges is showing some mixed signals, right? Because we have a higher low in here at 37.5 billion, but I can also see kind of a breakdown below this light blue line in here in a retest before continuation to the downside. So I really want to see in the next few days the open interest increasing from here. We have a very, very important increase in open interest, and that is all these futures that enter the market at the moment, pushing the price into the scene of the crime. But that scene of the crime in the price and in the aggregated open interest, the last thing that we want is a heavy rejection from here. So my personal strategy at this point in time is I hold on to my long. I've got my break even in there. If this pukes with a lower low in the open interest, I get stopped out in a small profit and I don't get any damage from that. If we break this line and we reclaim the light blue in here, we could go into all-time highs, and that's why I don't necessarily close the long immediately. Let's remember that we do have a CME gap here and we have a heavy chunk of fair value gaps as well located in the same area, overlapping, making the case of this move way more risky, because if you think about it, we have a breakout in here on the 4 hour on the price. We left this legacy issue in that is gonna haunt us in a way. So ideally what I want to see is that we go into 113 and we turn this, which is the neckline of yesterday's cup and handle, and it turns 113 into new support. If we resume from there, we could potentially leap behind the CME gap and continue up for a little bit longer. Let's say we go into 118 or 119 and we hit that liquidity that we've been noticing in the past few days. That could be a scenario, in which case my entry, which is somewhere around 111, right, somewhere around the base in here, might not get hit, and maybe I benefit from further upside. Now if the price goes beyond that and it hits my stop loss and it closes the CME gap, then I take that small profit and I re-enter with a long, or at least that will be kind of the intention. I always check the charts before fully confirming an entry, and I let my community know. They receive an email from Patreon. You can join with the link in the description. I have updated the Bitcoin status. We got the 4 hour price breakout. We are inside the CPR pivots of September. September is ending today, so we're gonna get new pivots tomorrow. Make sure that you are subscribed to the channel so we do the CPR model reading on Wednesday together. CME gap at 110 daily under next resistance on the falling descending parallel channel, and we got a potential incoming bull cross on MACD. We need to cover all of that. You can see on the 4 hour how we are coming in here to test this fair value gap, and at 112.5 we got a chunk of volume. That is the equilibrium for the 4 hour at the moment. So we are in the bullish area of the price action on the 4 hour and holding that equilibrium there at 113, also testing that area of open interest big that enter at 112.7, that is hunting the elevated amount of longs that we currently have with a positive delta of 370k. Let's take them down. If we take them down, we could potentially resume the upside. Now if we go for 111.1, where we also have a big area of open interest openings, then I get stopped out. If we go that low, hopefully we also close the CME gap so I can re-enter with a better average on a long. Let's find out where is this support at the moment. Is probably around 42 on the 4 hour, so that means going into 110.5 to do a full test of support. 22, which is the global support on the 4 hour, is currently located at 103.1. Worth also keeping an eye on that, because if we really need to close the CME gap, maybe we pinch below this. I always say it is a long, but it's a high risk. We went into the scene of the crime. Scene of the crime has that potential to turn, as you can see in here, it can easily turn into just a dead cat bounce. So watch out with that, but let's be prepared for not being that, and let's still ride the upside. Daily hit resistance, as I said. Intra candle we got very close to that 56 in here, but after reclaiming this level in green, that was pretty bullish, as I say, in the beginning of the day, and then we regain the middle of the range around here. Where is that resistance at the moment? It is located at 150 115.8. If we go beyond that level, if we go into 116, this move in here could continue into the highs. But so far at the moment, my descending parallel channel is rejecting the price. So let's hold 113 and let's try once again. Lose 113 and we are increasing the chances to put a new low. Very simple, very easy to follow, probabilities, not certainties. As you can see, the bull market support band look really nice with the green candle going all the way to almost 115. But now we are starting Tuesday and we are getting pushed back down into the bull market support band. So what do we think? We'll think if we lose support band, if we put a weekly close below this, then we need to look into our next card under the sleeve, which is the 50 weekly moving average. Why? Because it has acted pretty decently this cycle. And if we go below that and we start putting closes below that, we need to remember that then we are due for a dead cat bounce into it potentially. Again, probabilities, just past performance, not guarantees. Remember what I said yesterday. So far we are out of the woods somehow with the inverse head and shoulder, with the inverse cap and handle in here on the weekly, but this could still play out, right? This is a small liquidity hand to the upside that dragged the price into 115, but if the bears get very sticky in here, they could get away with doing some damage in here. Let's see, this is 21, this is 17 in terms of targets, but last October we just did a 12, so from here a 12 is around 100k. Hopefully that's all if we go there, and then we resume on the second half of October just like we did in 2024. Yeah, we got plenty of leverage squeeze signals in here. Remember that you can get access to these indicators, and every time this video gets over 1,000 likes, I'm gonna be doing a massive sell on Patreon, not just for accessing in the shop the indicators, but also I'm gonna give gifts to people so people can join my Patreon subscriptions as well for free. But we need to get into 1,000 likes, guys. And yeah, as I say, pinching the orange in here below 7% was a great alternative to start entering in a long. That happens at 108, and now the open interest oscillator has gone back into the positive, into 2%. We are not in the area of let's look for shorts. We are kind of in the middle of the range in here, and shorts are now getting squashed, and that's helping the dominance of shorts versus longs being liquidated to now pinch 5.7%. Remember, 1.5 months to 2 months in a bull market liquidating longs is already a lot, and we should be looking for liquidating shorts, and that's what we are doing now. 500 on ETFs on BTC and 500 over 500 on Ethereum 2. We are in neutral again on 50 today. We're getting closer and closer and closer to the lower band to look for longs, and I want to do something that I haven't done in a while because I really want to understand where I'm standing with my long. So I'm gonna focus on the liquidity in here, and I'm gonna go into the 5-minute chart on Trading Different. You can always get discounts to open an account on Trading Different. They are all in the description, and I'm looking where is the liquidity on the 5 minutes. I really care about this because obviously if we get into this chunk of liquidity at 111.5, I'm too close to my break even, and potentially I might get my long to close, which is all right as long as we go lower than that. And if I go lower than that, I can see this 110.3. At that point we close the CME gap. So if we go into 110 and I get stopped out in here, possibly I'm gonna re-enter around those numbers. Don't be a stranger and join my Patreon community if you wanna get notified first. Otherwise, it's public either way. I typically put it a couple of hours after on Telegram, on Twitter, and then on the day after on the BTC video. Yes, 107 is still there. Yes, it's extremely easy to get there. We got this big liquidity at 108 now on the past 30 days, 110 too, and then 118, which is the one I wish that we only go into 112.5. We just take this small one and we resume into here. That's why I haven't closed my long, because I really don't want to take profits just at 115. It's too small of a ride. Let's look at the order book, and you can see that there is some defense at 113 at the moment, but you can also see that the purple whales gave up. They got into 114.7 and they very quickly closed their positions, and that is why the price is coming back down. But the brown whales are insisting, they keep insisting in this area with larger positions. Hopefully the 112.7 here with the volume acts as support support. If we look into Binance, we can see some support coming in at 112, but then it starts coming down into 110. So if they cannot manage to hold this, definitely we are gonna hit the stop loss. Open interest has climbed all the way into the top of the price in here, and now it's affecting the longs getting pushed out of their positions already. Shorts have been persisting and they haven't come down yet, so there's a ton of shorts still open, and yet still the delta affects more the longs. So maybe some flash of them in the areas of open interest that you can see here, it's going to be maybe necessary. Let's have a look at how this is all positioned. We got some support as we saw in Market Monkey Terminal between 0 and 1%. 1 to 2 is negative, so we got more resistance. 2 to 5 is negative. 5 to 10 is where we have a big chunk of buying. Interestingly, we have red 10 to 20 and 20 and beyond. Funding rates were massively in the negative at the area of the top. So many shorts enter right there at the scene of the crime, which is natural. It's a neckline and that's what traders do. But since it went so much in the negative, I'm just wondering if they're gonna be squashed out. Right now it's back in the positive, so I suspect that some of these shorts are closing down their positions as we approach 112.5. Hopefully that's gonna hold right there. Something that is different between this cycle and the previous cycle, if we compare specifically these two legs, which many people are comparing, we could say this and this, or we could say this and this, is the fact that this top in here, comparing to this top, went back into the point of control. So from 69, it went straight into 47 and it pinched 42. That move from 69 to 42 is the last nail in the coffin for the bull market in the previous cycle. So we went into the point of control of all this trading range. In here, the point of control is 96.4, and instead of coming back inside the range of 110, we have bounced into 118, which is a lower high. That is against us. But what is in our favor is that this point in here, this trading range there, which is equivalent to this one, happens further away from the point of control at the top of the range in a new range. So that brings in some chances that we hold this area and we still continue to the upside. I wanted to say that, and that is still with that resistance of 67, which is 124k. So that is still kind of respecting the descending trend line in here with bearish divergences. Still some upside, but apparently not that much, I will say. So let's go into general markets. Let's start with how we closed yesterday. We got Nvidia kind of saving the day yesterday. DXY continues to put higher lows on the RSI, so momentum hasn't broken yet to the upside. We have here kind of the perfect retest, assuming that we hold that 97 this week for further upside. I am not bullish on the dollar longer term. I am expecting a bounce into $100 for now. That is kind of my short-term vision, and then we can assess whether we are gonna break the multi-year support. There's 14 years of support on this end. I want to look into gold because gold has a resistance with this descending trend line on the weekly, and we have already pierced that 79 RSI. You can see in here how we pierce it, and if this week we ended up closing slightly in the red or green, but very small candle, smaller than this, smaller than 3.8, I want it below 3.750, something like very tiny. That is basically a topping signal, and what we could be expecting at that point is another channel to the downside from the highs. I consider very low likely that we go beyond 79 and we start closing at a size of, let's say, 85 or 90 at this point in time. I am hoping that we get now on gold a big move down. We still have higher lows though, so this trend broke in here, it put a lower high and it broke again, putting a higher low. Interestingly, we were calling in here from resuming the channel after we have this breakout, and we have already done it. So now entering on a long on gold right here is just absolutely crap in terms of risk to the reward. It doesn't mean it cannot go higher, but you are really betting against your own odds. If you're already holding in here, this will be what I will say, start trailing and decide when you're gonna exit in case this retrace increase too much of the profits. Not financial advice, just probabilities. The probabilities are there. I read them. You do whatever you want with that. VIX, this week candle in the green. Is this going to be the week where we see the VIX making a big jump in here? Potentially the shutdown could bring some of that. I don't know really, but we have a bullish divergence in here, and we have the next job, which is to reclaim the 21 weekly. NASDAQ is currently opening the day slightly in the red. That could be the reason why Bitcoin is also coming back down. The week is still in the green. Let's remember that the NASDAQ has some big liquidations up until 636, and we are in the context currently of a breakout that is slowing down, but it hasn't reached its maximum potential, which could be even getting into 76 RSI. So momentum says that this could get into this area in here, which is more or less around the area of the liquidity. S&P is getting very close to the final steps of the revenge rally at RSI 74. So we need to change this, and that is around 681, which is where we have the last peak in yellow here, 683. Notice that at over 700 and at 720 we got some red coming in as well. These are all new shorts, people that are shorting this. Fresh short liquidity starting from 28th of August, and this one at the top starting pretty much from yesterday. And just watch out with this, guys, because the Nikkei, if we put the line properly, this week is below support. It has done this already multiple times, so it's definitely rolling over. We got, if we use this pivot, we got already a breakdown. If we use this one, another one. If we use this one, another one, and another one. So basically the trend at the moment is to break down on the Nikkei, and if we get a decent breakdown, we could come back into 21 weekly. By the way, you guys asked me for the bull market support band, so I'm gonna enable it in here. Pay attention to the 21 weekly that is in green. Once I turn on the bull market support band, it's pretty much the same, right? So all my analysis on the 21 weekly could also partially apply to the bull market support band, which is currently on the S&P located at 626 and on NASDAQ around 22.9. Let's move on to altcoin season indices and BTC dominance and all of that. We're back at 67. Yesterday I made you aware that we were at 76, but this is all the time repainting an intra candle. The day now is in the red. Yesterday was big in the green. That's thanks to Bitcoin retracing. No news on USD dominance versus total free. We're still in that same range. Our W now is pointing up into the resistance of 40. This has been in multiple shapes of W. This one is the most bullish for Bitcoin dominance looking, because obviously in here we get a high that can reach a little bit more straight into 49, 48, which is the resistance of the ascending wedge. That is as high as we want to go. If we pierce this too high into 52, then we risk going into 60s, and that is not good for altcoins. So hopefully we find our resistance in the early days of October, and then we get continuation of Bitcoin dominance to the downside, which has been kind of my bias by looking at Ethereum adding 550 almost yesterday on the spot ETF, more than Bitcoin in terms of millions of dollars, and by Ethereum holding the support in here. All of these are early indications of a potential continuation of altcoin season. You can even see total 2 kind of showing up in here in a continuation area. Let's cross the fingers that we hold this and that we don't have to come back into support. Support on total 2 is around the 1 trillion, whereas breaking out into the top of the range brings total 3 into 3.73 trillion, which I will assume that Ethereum by then should increase the market cap massively to help achieving such a huge target. Targets are just speculative, are based on probabilities, are not guaranteed at all. So let's do the summary. We are in a very, very risky situation to be in a long if you are not risk-free like we are. I'm currently running along in a break-even, which means that the worst-case scenario, I just make a couple bucks, but I cannot lose, assuming that the stop loss works. Price is currently retracing into 112.8.5. That is where there is support. It's an area where open interest increased massively. So my bet is hopefully we just take that liquidity. Hopefully we reduce the delta, which is quite increased, affecting the longs at that point, so we don't have to go below my 111 entry and hit my break even. But if we do, that's still not a big problem because we could maybe re-entering after closing the CME gap. If we see something really dramatically dropping down, I might wait to get into 107. After all, at that point we have the short-term holder realized price, we have the biggest 30-day liquidity waiting for us. So there is really no ambition from my side. I just want either this to rally into 118 and to hit higher liquidity, I'm happy with that, or I enter from a better price and I start building a position for October. Remember that if we close today in the green, which is currently the case, still at this hour, that tends to mean October and November in the green. But do not be that naive to expect just a single move up into October and November. In 2024, October started with a move down of 12%. So all those people shouting October without really looking into it are definitely gonna be the panic sellers that we are gonna use to build a better position if we get that lucky. Notice as well that this pinch a little bit too high in here on CME. So in CME it looks like a liquidity grab which is bearish. On Binance it doesn't look like that, it just looks like it hits the resistance. Anyway, just some final words. Thanks so much for watching this video. I hope you did enjoy it, and remember that in now less than an hour I'm going live with BTC and alts. So write down the alts to secure them so I can do TA on them. See you there. Bye bye.